there being another test up there, and when we spoke a couple of weeks ago, I was highlighting a couple of pin bars, and pin bars are those bearish signals that show that the bulls are trying to drag the market higher, but ultimately get smashed back down. And then there was another one 4 sessions ago, and now we've seen the follow through to the downside. So, yeah, it's turned out to be a fairly accurate prediction. I don't think it was a particularly bold one, given the fact that the market had stalled out at that level a couple of times previously. But what's worth noting is that it is an emphatic rejection. You know, we're down some 300 points from the highs in fairly quick time. And, you know, just fundamentally, putting the technicals to one side, there's a lot to deal with at the moment. So we all know about the hawkish shift in global monetary policy, rising interest rates. China's COVID lockdowns are a new element, potentially feeding that inflation monster as well. We've got the uncertainty in Ukraine. That's not new. But there is now equity outflows. People are talking about peak margins. And it's all looking a little bit glass half empty rather than a little bit glass half full. The other thing I said last time when I was on the show, Scuddy, with particular regard to the XJO, was that if it did get down to around 7,200, that's where I'd probably be more inclined to be a buyer. That's the bottom side of the immediate range. I'd just be careful there, though, for anyone thinking about doing that at home. If 7,200 holds, then, of course, that's the time to consider getting back in again or dialing up the risk a little bit. But it really needs to hold and probably needs to bounce. And if 7,200 fails, there's not a lot of support until we get down to 7,000. So it could potentially get worse before it gets better, but it all depends on what happens around that 7,200 level.